again, Forex traders? Welcome back to my channel. Yours truly, Desmond Samuel. I am back on the screen. I'm back on the chat again to let you people know what's going on with the market, and as usual, keep you guys updated. The past week has been really silent across the forex market. We haven't really had that much activity apart from gold actually hitting our target. I think I should actually talk about gold. I think I'll talk about gold next time. All right. So now for crude oil, yeah, I just want to update you guys that we've actually smashed TP. We smashed all our TP, which was somewhere around instead of here, like, so I think it was about $65 a barrel. And the deciding factor for crude oil will be on the daily time frame. Let's see how things look on the daily time frame for crude oil. So all the way from here collapsing down here, we actually gave off some form of supply level somewhere around here, like, so that we can actually play with. So for crude oil, I think I'll be looking for one more shot on crude oil, depending on what the market presents. I can see a trend line descending like so from here. Okay, so you can see like a descending trend line from here that we can actually play with. So let's see how the market reacts around here. So for crude oil, it's very simple. I would actually wait to see what the market does around this level. Obviously, we have a double top from around inside of it, like so. I think I had like another level here. Let me just get rid of this level. Okay, all right. So that does this guy nicely. This guy properly. All right, so crude oil, as far as I'm concerned, has actually hit a very solid level. This level has been a block. So for crude oil, as far as I'm concerned, crude oil is actually pinned to a level. This level has been solid for over the years. So moving on here, we have a double top, obviously. So this was a trend. This is a downtrend. All right, so this is a downtrend, obviously. Then we have a double top somewhere around here, like so. So for crude oil, moving into next week, I would actually want to see the crude oil pull up into some levels of neckline retest. This is the double top here, so this is the neckline. So I actually want to see crude oil pull into somewhere, some regions like this, maybe $70 a barrel, and then we can actually look at shorting there all the way back down to $66 a barrel before. Because now, one thing I want to let you guys know is that in the market over time, I've come to realize that if the market wants to reverse at a level, it would most likely give you a chart pattern. Do you understand? That is, will most likely try to test that level twice. That is, it has tested this level once. It will come back to test it again at least the second time to be sure that this level is actually solid before it actually now goes in the opposite direction. That's if crude oil is actually going to go higher. Yeah, so I'll just look at crude oil closely. Let me see what crude oil has to do somewhere around here, like the neckline of this chart pattern here, which is supposed to be double top here. Let me see how crude oil reacts around the $70 a barrel. Then what crude oil does around here would actually let me know if I would actually go ahead to execute this trade. All right, so let's see how the candlestick formation happens around $70 a barrel. If I see something beautiful, I'll be here to let you guys know. And if, for instance, we get here and they'll just blow out of here, then that is very normal. I'll let you guys know as well. But as far as crude oil is concerned, I'm actually favoring this guy to the downside once we get here. So onto the S&P 500, I came on here earlier on to let you guys know that I was looking at this double top closely to see how the market will react around here, and we have actually broken below the neckline. So as far as S&P is concerned, not much talk, but sorry guys. So as far as S&P 500 is concerned, I can actually see this guy melting at least to 5,000 basis points. All right, this is a no-brainer because now this is a weekly time frame. We've successfully put on a double top and we've actually broken out of the neckline, which is the validation, for this chart pattern. And now it's starting to point southwards, starting to point to the downside. So I kid you, this looks heavy as we speak. So believe me, I will not be surprised to see the S&P 500 melting all the way towards 5,000 basis points, and scaling down to the daily time frame. All right, so it's going on to the daily time frame. Let's see how things look. First of all, we've actually broken out of this inner trend line. Remember, I told you guys about this inner trend line somewhere in my older video. When I came over to break down the S&P 500 and NASDAQ, I said to you guys that this trend line was pretty much what was holding this guy back, and we've actually just broken out of there. So long story short, this trend is out of the way. So as far as S&P is concerned, it's going down to the daily time frame. Let's see how we can actually take advantage of this move here. So all right, so we have the neckline break, obviously. So what we need to look for is any consolidation somewhere around inside of this neckline area, and then we'll short this guy. So probably maybe around 5,800 basis points. Let's see how the market reacts around, because already this is a level. All right, this is also a level. You understand? So let's see how the market reacts somewhere around here, and if it doesn't melt all the way from here, we could actually anticipate the deeper pullback by from 5,800 basis point level, then from there you can actually start shorting those guys. So if you're gonna take this trade, you should actually point out your recent lows as your take profit point, all right? Because if you're shorting this guy, you need to point out this guy as your first TP, then second TP somewhere around inside of 5,000 basis points for the S&P 500. But to take this trade, you actually have to wait for but to take the trade, you actually have to wait for a pullback into 5,800, at least 5,800 basis point. I favor 5,800 basis point because I feel that the market will actually pull in deeper into this region somewhere around here, like I said. Because now, if you look closely behind, like this is a high, this is a low, lower high, lower low, lower high, lower low. So technically speaking, we ought to go for a lower high somewhere around here, like so, and then short this guy all the way from 5,800 basis points. We have lots of people to the downside, so this should cover at least majority of Q2 as well, because this is Q1 and then this is pretty much midway Q. So this is Q1. This is the last month in the first quarter, and we're pretty much midway through. And all right, so because this is the last month in the first quarter and we are pretty much halfway through, so we need to see the market pull into 5,800 basis points, and this trade from here to here might take maybe 2 weeks, maybe a month. All right, so you're looking at a trade that could run into the second quarter, at least the first 2 months of the second quarter from here to here. All right, and then from here we can actually start looking to buy this guy all the way to the upside, because at the end of the day, at the end of the day, this market is just pulling back. I like to just point that out. This is not the end of the world, guys. The market is simply just fulfilling technical criteria. All right, so I like to just point this. So I like to just point this out, guys. All right, the market just. So I like to just point it. So I like to just point this out, guys. So the market is not collapsing per se. It's just pulling back to fulfill every single order. So I like to point out the market is not collapsing per se. It's just pulling back, into significant levels to fulfill certain technical criteria before actually continues higher. Remember, we have this trend line all the way from this bottom. So this was pretty much the first touch here, second touch somewhere around here. This is more like most likely going to be the third touch here. So a meltdown into at least 5,000 basis points actually give us room to blow this guy through the roof all the way. All right, all the way. I mean, you can actually span. So there is don't worry, I'll actually talk about that one in the next video. But there's this Fibonacci principle that states that A to B has to be equal to C to D. All right, so literally, if you're gonna draw this guy from here, like so, all the way to this point. But I think so if so it literally means if you're gonna draw this guy from here to here, that means A to B, the measurement of the pip count from A to B must be equal to the pip count from C to D. All right, so literally you're looking at S&P 500 expanding into at least 7,000 basis points in the future. Now this is a long term trade, but somewhere around 7K is where S&P could literally rally into. All right, so that's just the Fibonacci technique. Don't worry, I'm coming out with a new video on how to use Fibonacci, so you can actually learn how I use these things. All right, so long story short, from here to here must be equal to here. All right, so that's just the trick. So but let's just focus on what's happening at the moment. On S&P 500, we need to see a pullback into 5,800 basis points, and then somewhere around here then we can actually start looking to short this guy all the way down to at least 5K basis points is what I'm actually going for. If not, we can actually come into at least 5,200 or somewhere around here, like so. All right, so that's just that for S&P 500. Nothing serious happening, just a pullback, guys. You need to stop panicking. This is just a pullback. All right. Alright, guys, on to NASDAQ. So as you can see, we've had like the first touch, and this is second touch here. Ascending trend line that has been ascending for years. This trend line started from I think 2020 all the way down to 2022. You see, so this market is just this exact same thing happened somewhere around here where we had like the impulsive move, then the pullback. All right, so the impulsive move and the pullback. So after an impulsive stretch like this, the market always has to consolidate, because at the end of the day, the market only trades for 40% of the time. For the rest of the 60%, we're pretty much consolidating. All right, so in this case, we had like impulsive move, so we need to pull back into significant levels before actually blow all the way through. And this is also a chance for those of you guys that love to buy this very long term. This is also a chance to at least carry everybody along. So I urge you to not only make money from this move, but also learn. That's something that has happened to S&P is what's looking to happen on NASDAQ as we speak. So by the way, if you see US 100 or you see NASDAQ, if you see US Tech, exact same thing, exact same pair. Right? So as you can see here, and what S&P 500. So if you want to know how to trade US 30, the Dow Jones Index, US 100, that is NAS 100, you need to shadow the S&P. All right, you need to see what S&P is doing. So as it stands here, you can see exact same chart pattern, double top neck and break. So this right here exposes. Let me see something real quick. Let me check something real quick. All right, so this right here exposes NASDAQ to at least the 17K region. So long story short, we've actually successfully broken down below this neckline. So what we need to see is a pullback into 20K. 20K 600, then from here we'll actually mount all the way down to at least 17,200. All right, so it's just very, very simple and straight to the point. So for those of you guys who love to actually capitalize on this trade, it's very simple. Just wait for a pullback into the neckline. Like so, as you can see, I've marked it out nicely. That's around 20K 500 or 20K 600 per se. So a pullback into this neckline here will be a very good point to actually start shorting Nasdaq. Prime target remains all the way at 17K 200. All right, but you need to be taking your TP along the way because this was also a point of reversal for the market. All right, but from 20K 600 all the way to 17K 200 is enough money, man. This is looking like a decent drop. All right, so you need to make all the money from here because the market always gives you like three pullbacks. I always say this thing: the market gives you three pullbacks. This is the first pullback here after breaking out of this range, after breaking out of this key level. First pullback here, second pullback here. The top pullback always does the trick. All right, so after the pullback here, and by the way, I'll taking these trades live with you guys on this channel. So best believe you need to fund your account and get ready for some action. So after the pullback into the neckline here, we actually collapse all the way down to 17K or 1720 somewhere inside of here, like so. Then from here, we can start looking out for what the market wants to do because we could actually even dip lower into ranges of about 14K, but let's just see how the market reacts somewhere around here, like so. Do you understand? So a pullback into 17K and then we'll actually knock this guy possibly through the roof all the way to the upside, but we need to see pull back into at least 20K 600 and then mold now this guy all the way down to 17K 200. All right, so that's just that for NASDAQ. All right, so if you found value in this video so far, I urge you to go ahead and subscribe to the channel and turn on the bell icon so that whenever I come back here, I drop a video, you'll be among the very first few to know when this market is actually ready to start printing some money. All right, so you don't miss any trades. And then also I leave the link to my Telegram community and my email on as a first comment, so you can reach out to me personally if you have any concerns whatsoever. But as far as NASDAQ is concerned, we're actually shorting this guy all the way to 17K, at least 17K 200. So for BTC, okay, you boys better brace yourself because BTC. BTC. All right, so for Bitcoin here, I think I'd like to see one more pullback into at least $92,000 per coin if that happens. All right, so that's just that for BTC. So if you're holding a few coins, do not panic. The market is just fulfilling technical criteria. Just allow the market pull back into 90K somewhere around there, like so, then roll over on its head. But you need to hold on to your guns, stick to your guns because BTC is definitely poised to roll over to at least $65,000 per coin. As far as I'm concerned, BTC still has some more room to the downside. This is not the end point of BTC. We could still see BTC roll all the way to 64K, 65K thereabouts. But from here, we now know what the market wants to do. But as far as BTC is concerned, with the present price action, this guy is poised to at least drop to at least 60K, 65K per coin for BTC. This blue button around here, like so. That's just that for BTC in a nutshell. All right, so on the dollar yen, we've actually seen the dollar yen start to break down below 47 dollar price point, and now the market has actually created subsequent supply levels somewhere around here as it was dropping from here to here. We've seen some supply levels to play with. So long story short, for the dollar yen rather, I'm still waiting patiently to see how the market reacts. I'm banking on seeing a pullback into at least regions of about here, like so. Let's say pullback into at least 150, and then we can actually melt this guy all the way down. So if you're not subscribed to my channel, you need to go ahead and do so because the market is about to bring some hell of the money. So if you're not subscribed to my channel, be sure to do so right now. Turn on the bell icon because the market is about to bring us some serious money. Like guys, USDJPY is about to melt all the way to 140, and you need to be a part of my Telegram community, which I'll leave the link in the first comments. I'll leave my email there. You can reach out to me for whatever reasons. I'm open to collaborating with you as well. By the way, guys, leave a like so that YouTube can recommend this video to as many as possible because you don't know how many traders out there are actually lost in the market, and I'm here to give you guys clarity after clarity and illumination and pure undiluted forex knowledge. All right, so this is just the educational content. I'm all for the education because I feel like a lot of the forex traders here are not really that educated. So I've actually taken it upon myself to come on here every single week in, week out, to let you people know what the market is all about in depth. All right, so for USJPY is very simple. A pullback into 150 will expose a pullback into 150 and a reaction, guys, and I had to point that out. Reaction of a 150 inside somewhere around that you can like so, a nice bounce or maybe whatever pattern we see that we can trade. By the way, if you want to know how we trade with the entry and exit strategy, you can come to my Telegram community or enroll for the mentorship program. All right, so we pull back into 150, we'll actually multiply all the way down to 140, and this is going to be one of those easiest trades, man. Like, it's so easy because I can see a supply level somewhere around here. You've had one, we had one here, so best believe market would most likely pull into here and just play around here and then bounce here, then give us a decent entry, short this guy. All right, guys, so on to pound yen. I got a request that I should actually do a breakdown on pound yen, so I'm just going to do a quick one because this pair, I mean, you can see that the pound is currently strong at the moment. The pound is actually strong, so the pound yen looks very, very decent. The pound card actually looks very, very decent to the upside. All right, so let's see how things look from here to here. We have this ascending trend line that has held nicely over time. Very simple here. So what we need to see is pretty easy and pretty straightforward. They pull back into regions of about. So this was a range breakout, right? So scaling down to the daily time frame. Let's see how things look. We already have a demand level to play with, all right? So we had this very decent demand level around here. Then this was like the top of this range, and we're actually broken at the top of this range. So this was more or less the top of this range here, and we're actually out of it. So what we need to see is very, very simple, all right? So pulling. Oof, this is a dicey one. All right, so a pullback into regions of about it's a very dicey one. Let me tell you how it looks. Let's see. Okay, all right. So a pullback into 1.81894, which was the past demand level somewhere around here in the past. It held nicely. So let me show you where that guy held nicely somewhere around here. So a pullback into 1.8000 for pound card will actually be a very nice place to actually start looking to buy this guy. So practically what that means is you need to wait for a pullback. If you're the pound card trader, you're the one who loves to trade the pound card. Like I said earlier, pullback into somewhere around here, like so. Just wait for a pullback into 1.8000 region somewhere around, and you can actually start going long on the pound card. Man. All right, so a pullback into 1 point reason about maybe 1.84. All right, so with the pound, so all right, so for pound card, if you're looking for a mention on a pound card, it's very simple. Allow the market pull into region of about 1.82 somewhere around here. That's it, because this demand level held all the way back in the past. All the way back in, I just showed you where it held. All right, so just wait for the market to pull into region of about maybe somewhere around here, like so. Here. 1.82000. From here you can start buying this guy all the way to the upside. All right, so um all right, so a pullback into 1.82000 will be and I all right, so a pullback into 1.82000 will be an ideal point for you to start buying, but you need to be wary of this. But you need to be careful with the other place here, right? So this level, these spreads are tricky, man. I'm not really a big fan of this spread, to be honest. All right, so a pullback into 1.82000 will be ideal for us to go long on this pair. So from here to here, from 1.91, actually let me put this on the round the figure, because the market loves to reverse and take a halt around the figure. So 1.9000 all the way from 1.8200 to 1.9800, we have roughly about if I'm not mistaken, 1.8200 all the way to 1.9, roughly 830, 840 pips, if I'm not mistaken. Roughly 800 pips. Let's just call it 800 pips. All right, so from here to here, likewise the pound dollar. All right, so we have space all the way to the upside, decent trade. All right, so again, this is not a line, guys. I'm just using to point out your level that you should actually look out for. But if you're taking this trade, best believe you have to use the actual minor level tool to mark out your levels nicely, and allow the market pull into 1.82, which is somewhere around here, like so. This where the market bolted all the way from. So if you're taking this trade, ignore the lines. My lines are not for you to place the trades from. I'm just using it to mark out potential turning points in the market for you. All right, so if you're taking this trade, I actually what's the problem. All right, so if you're taking this trade here, all right, ignore the lines. This is where use your levels nicely. All right, use your key levels nicely and your minor levels nicely. This is the level to actually wait for the pound card. A pullback into this level here will actually expose all the way to 1.9. All right, so pullback here. This is something like this. All right, and that brings us to the end of our video. I believe I've touched every single angle of your concern. By the way, if you have any questions whatsoever, you can actually leave them in the comment section. I'm checking every comment. I'm answering your questions live and direct. Alright, so leave a like so that YouTube can recommend this video to as many viewers as possible. And then subscribe to the channel, turn on the bell icon, so whenever I drop a video, you'll be among the very right. So the mentorship program is actually going on. So if you're actually interested, you can go ahead and then let me know. Alright, so that's just that for this episode.